till the previous class, we were discussing TDS and we did up to section 194C. So, again, any questions of the previous class you may ask before we head towards the sections which we'll be doing today. And if you do not have any question, please feel free to attempt the questions on your screen. Just a small exercise to refresh your people knowledge of the previous class. So these are just questions which I formed like 5 minutes before. So you may choose to answer the one to answer all correctly. We'll give a shout out. So please participate, and obviously meanwhile you can put up your queries of the previous section. Take your time to set up and take your time to attempt these questions. Students, just remember whatever the question asks, please attempt to provide that only. If the question asks about the rate, give the answer in rate. If the question asks about the amount, give the answer in amount. So please be very, very particular while attempting not only tedious question, any particular question, that what is the final outcome the paper setter expects. Rest other things should go in your working note or should go in your explanation. So the first answer should be restricted to only till section 194C, which all sections your 190CB applies. Ambika, sure, I will, don't worry. So section 197B is a COVID attempt section, COVID relief section, you can say, which is a limited period relief which begins from your 14th May 2020 to 31st March 2021, which aims to provide reduced rate of TDS instead of the full rates which we study, reduced rates of TDS on certain sections. Quick, I'm expecting an answer so that the class today can be started. Okay, I got answer for question 2. The first one to give all correct will ensure you people only that you have keeping in hold the knowledge which we are discussing. Good, good, Sumit Jain. Just one more answer left. Okay, so question one ka answer is we did up till 194C, so 193, which is your interest on securities. Try remembering it. 194 dividends, 194A interest other than interest on securities, and 194C contract. On 192 and 192A it is not applicable. Both are applicable to residents. 194B and BB also not applicable. Both are applicable to resident and non-residents. Yes, basically on where residents are your deductee, but in 194 EE, which you will see of your national savings certificates, or your 194 F, which is for reinvestments of mutual fund units, they have written any person. But generally, if you will see, these are the one which are benefiting our resident assessees. Okay, the answer to question 2 is your the answer to question 2 is 1,06,860. The TDS would be deducted at MMR rate, because 192A says that if you do not provide the TDS, the PAN number, the TDS would be deducted at MMR, and MMR is the rate including surcharge and cess of the highest rate and the highest surcharge. So 42.744%, we discussed it in the previous class. So 2.5 lakhs ka 42.744% would come to 1,06,860. And the last ka answer is 30%. Okay, so I see on my screen Ambika, right, does not have any impact, does not provide the PAN, but the rate is 30%. Who did all correct? See, first one to give correct was Sumit Jain, but he did not answer question 1. So good, and I'm very happy to see most of you have given all the correct answer. Sumit did give the answer to question 1 right. Ambika, now I hope you will not make an error. It is 42.744%. Great. So now shall we move towards our class today? We are discussing now section 194D. Section 194D students talk about insurance commission. I hope you people have your notepad handies, okay? So section 194D talks about insurance commission. Nature of payment, insurance commission. So who will deduct the TDS? Any person who is an insurance company will deduct the TDS of its resident agent at the rate of 5%. At the rate of 5%, and hence it is a resident agent due to COVID. And section 197B, this rate is 3.75%, which is 75% or 3/4 of the rate, and will deduct the TDS when? At the time of credit or payment, whichever is earlier, and will deduct TDS only when the commission amount during the financial year exceeds 15,000, so more than 15,000. When the commission amount exceeds 15,000. So this is very common. LIC has so many agents. So LIC agents, when LIC pays commission to their agent basis, the policies they get secured or renewed, or any investment they get done for the LIC. So they get commission on that. And on that commission part, 5% or 3.75%, and obviously the time period for 3.75%, I'll not write it again and again. Now I hope you people remember it. 14th May 2020 till 31st of March 21. will deduct it when the amount exceeds 15,000. I hope this is clear. Next is interesting one, section 194DA, which is TDS on payment in respect of life insurance policy. Now, when the moment you people see the term life insurance policy, immediately section 1010D should trigger in your mind, and also 80C. So for a minute, let's forget section 194DA and connect our section which you have already understood. Section 1010D says that any sum which is received, whether as a bonus or otherwise, from a life insurance policy is exempt subject to certain conditions. So life insurance policy ka amount is exempt. So maturity amount which we say, or surrender amount which we say under life insurance policy is exempt. But ATC, if you remember, ATC is about deduction on premium. Deduction on premium. Sorry. So deduction on premium, when you, during the lifetime of an policy, I hope you all know how policy works. For certain years, you need to pay the premium to the life insurance company, and on certain conditions, they will give you bonuses as cashback, or on sometimes premium back policies are there. Certain policies are there, but most of the time they have a maturity amount after 10, 15, 20, 25 years and so on. So you are paying premiums. So when you pay premium, you tend to claim deduction under section 80C subject to 1,50,000 limit. And when you receive the lump sum amount or the maturity amount, you get, or any bonus amount even, you get deduction under section exemption under section 1010D. Clear? But here, ATC says that deduction on premium would only be allowed if a premium is within certain limit. Can you people please tell me what is that certain limit? Because this obviously you people have done in capital in your deduction chapter. So what are certain limits of capital sum assured which we need to take in mind before claiming the deduction of premium under section 80C? Quick, revise yourself. If your policy is issued quick, before first issued before 1st April 2012, between 2003 to 2012, and then after 1st April 2012, on or after 1st April 2012. How many of you remember it? Yes, after 2012. Okay, उल्टा लिख दिया. Good, Ambika. See, if the premium would be allowed subject to the limits of 80C, if the premium is for a policy which is issued before 1st April 2012, policy gets issued and then the premium goes on for the lifetime, for a certain period. So the policy is issued before 1st April 2012, then you will get a premium deduction of 20% of the capital sum assured. No maturity amount, students. And if it is issued after 1st April 2012, then it would be 10% of the capital sum assured. And obviously, LICs and other insurance companies have tend to determine the premium amount now as per the restrictions of income tax. Okay, this is the amount which you get which you get as deduction under section 80C, or the premium amount paid, whichever is lower. Yes. So this is the restriction which you keep in mind. If your premiums exceeds these restriction, then whatever the lump sum is received is not exempt. That means it gets taxable. What did I say? If the premium exceeds these restrictions, then the lump sum amount is taxable. If they are in these limits, then the lump sum is not taxable. But yes, Keyman insurance policy is always taxable. Amount received under Keyman insurance policy. So this, if this is clear, then only 194 DA would be clear now. Again, I repeat, if the premiums are within this limit, the lump sum would be exempt. If the premiums exceed these limits, the lump sums are taxable. So now TDS would be attracted when the lump sum is taxable. That means my section 1010D is non-operative. TDS would attract when the income is taxable, and income would be taxable when the premiums are exceeding these limits. So a question will not come to you directly. You have to see the premiums are within these limits. If the premiums are within these limits, 194 DA would not apply. Number one. If the premiums are not within these limits, 194 DA would apply. So what are the amount for 194 DA? Now let's see that. I'll write here, okay? So 194 DA would apply on any person paying the payment of or lump sum of life insurance policy to any resident will deduct the TDS at the rate of 5%. Will deduct the TDS at the rate of 5% of income amount. Now this is another catch which you have to see here of the income part of the life insurance premiums, life insurance policy. Now what is the income part? See, income part is very simple. I am paying 10,000 premium per annum for 10 years. And I receive 11 lakh rupees after 10 years or after 11 years. So what is my income? I paid 10,000 into 10. Not 10,000. 1 lakh I should say. Not 10,000, 1 lakh. Make it 1 lakh. Okay? 1 lakh. 1 lakh per annum premium for 10 years. So 10 lakhs. And I got 11 lakh rupees. So what is my income? 1 lakh rupees. So 5% of 1 lakh would be deducted instead of the income, instead of the lump sum amount. So you are paying 11 lakhs, but the TDS is not to be deducted on 11 lakhs. The TDS has to be deducted on the income part, basically the gain part, which a person, or the profit part, or you can say the additional part which is getting over and above the premiums, the additional part which is getting over and above the premium. This is clear? Yes. But here, students, you need to take care of one thing in mind, which is very particular, the time limit, the triggering limit. So the time limit is at the time of payment, not at the time of credit. So the TDS would be deducted at the time of payment. Where should I write? Now the threshold limit. The threshold limit for this particular section is the payment. When the payment exceeds 1 lakh. Now here you have to remember one thing. Step by step again. Section 194 DA is applicable when you get a life insurance policy sum exceeding 1 lakh. I'm talking about the sum is more than 1 lakh. but the TDS would be deducted on the income part, which you will calculate by subtracting the premiums and the amount which you have received. Clear? Now here you have to see the triggering limit is as per the sum, but the amount on which TDS has to be deducted is the income. So even if the income is less than 1 lakh, even if the income amount, which is the difference of the premiums and your amount which you have received, is just 10,000 or 20,000, then also you will deduct the TDS. Why? Because the payment has exceeded 1 lakh. The payment has exceeded 1 lakh. So these are some particular things which you need to remember. 80C, 1010D, if both, if 1010D is not getting triggered, that means the amount is taxable, then only 194DA would be triggering. So we'll do some questions on the screen, please. 1 second. Mr. X, a resident, is due to receive 4.50 lakhs, 4,50,000 on 31st March 21 towards maturity proceeds of LIC policy taken on 1st April 2018. So policy is taken on 1st April 2018. Now you have to, obviously 10% limits will apply, for which the sum assured is 4 lakhs and the annual premium is 1,25,000. Sum assured is given to check the premium amounts, and then 4.5 lakh is the sum which you have received. Now see, once I'll do first part and then second and third part you people will tell. Okay, so now 4 lakh ka 10%, 40,000. My annual premium is 1,25,000. That means it is exceeding the 80C limit. That means the sum which I will receive would be taxable. So this 4,50,000 would be taxable. But 4,50,000 would be taxable. But the TDS would be deducted on what amount? On the income amount. Now, what is the income? The policy started on 1st April 18. So 18-19, 1 year, 19-20, 20-21. So 3 years I paid the premium, 1,25,000 into 3,75,000. Minus 4,50,000 minus 3,75,000, 75,000 pay, the TDS would be deducted. Now, since the amount is to be received on 31st March 2021, TDS would be deducted at 3.75%. Clear? Any doubts on this? Sumit, see, 5% is the general rate, but 3.75% is your 197 BK accordingly. Interesting question. Nitesh says, ma'am, sometimes bonuses are issued. So bonuses ke case mein, it is again better to be treated the whole part as an income. But then you have to see, I'll again say, then you have to see what is the maturity impacting, whether you will have premium, what you say, every year bonuses instead of receiving the lump sum, then the case would be other particular case, or it's just a bonus which you'll receive after 10 years and then after 15 years you will receive the lump sum. So that particular cases in your question may not come, but this is how you cannot just comment it in a one way. I would request you all to please attempt question for Mr. Y. Mr. Y is a resident and is due to receive 3.25 lakhs on 31st March 21 on LIC policy taken on 31st March 2012, for which the sum assured is 3 lakhs and the annual premium is 30,100. Step 1, to check the premium limit. Step 2, to see 1010D. Step 3, to calculate total premiums. Step 4, to calculate income. And then finally tell the TDS amount. And those who are through with part 2 can attempt part 3. So बहुत सारे interesting sections would come. So you will in fact find this class interesting today. Just try relate as much as you can. Very good, Preeti. The moment step 1 may the premium is within the limits, TDS question is not formed. So since the policy is issued before 1st April 2012, the limits are 20%. So 3 lakh ka 20%, 60,000 and the premium is 30,100. Good. Next, please. Mr. Z, a resident, is due to receive rupees 95,000 on 1st August 2020 towards maturity proceeds of LIC of policy taken on 1st August 2014, for which the sum assured is 90,000 and the annual premium is 10,000. Very good, Sumit. Very good, G. Prasad. G. Prasad, your reason is wrong. Question not visible. Sorry. I'm so sorry. I'll share the screen only. Sorry. Very good, Nitesh. Very good, Preeti. TDS not applicable since the maturity amount is less than 1 lakh. Even if the premium is more than 10%, he would be liable for taxability, but TDS triggering is not there. Good. So now let's move ahead to our next section. Now next section is a section which you people know while you did your resident chapter. Where's my pen? Yeah. So this section after 194D, 194DA, we begin with section 194E. Very good. Everyone has given the correct answer. Super. Okay. So in 194E, this section involves payment to non-resident, sportsmen, entertainer, and sports association. Why I'm writing sportsmen's? Sorry. NR sportsmen, sports entertainer. I'll tell who are entertainer. And your sports association. So this is strictly for your non-residents. So that means whatever rate we are talking about will include surcharge if applicable and how health and education says. So this section provides that any person who is paying to non-resident sportsman and entertainer who are not citizen of India also. So This is also a condition which you have to see, that they should be non-resident, but at the same time should not be citizen of India. Any income which is referred in 115 BBA. 115 BBA mein what is referred? We'll come to that. To a non-resident sportsman or entertainer, any income which is referred in 115 BBA or to a sports association will deduct TDS at the rate of 20% plus surcharge plus cess. Surcharge is applicable. Now you will ask, surcharge at what rate? Surcharge of the income which you are paying. So the income is 20 lakhs, you pay it accordingly. No surcharge. If the income is 50 lakhs, then you add surcharge. This again would be done at the time of credit or payment, whichever is earlier. Now let's come to the, so there is no threshold limit. There is no threshold limit. Whenever you're making the payment, you have to deduct the TDS at this rate. Now we'll come to 115 BBA. What is 115? What does 115 BBA says? 115 BBA says it covers the income which is received by non-resident sportsmen. When I talk about non-resident sportsmen, I talk about athletes. I talk about your person who is actually playing the game. I do not talk about your commentators, your umpires, your referees. Okay, all of these are not my sportsmen who get income by participating in the game, not crosswords or lotteries. That is taxable in 194B. Or who get income by coming into some advertisement, or who get income by contributing any article in or regarding game of sports in newspaper, magazines, or journal. So sportsman, for example, who's your favorite IPL sportsman? Foreigner. Let's take Chris Gayle. Okay, so if Chris Gayle is getting the IPL ka amount for participating in the game, this would deduct TDS, number one. Then he comes in lots of advertisement. All those advertisement would also, while paying it to him, will deduct TDS under section 194E. If he gives some interview or some article or anything in a newspaper, then again that newspaper company, while paying it to him, will deduct TDS under section 194E. Now we come to the entertainers. Now, who are the entertainers? Now, example like your cheerleaders. So cheerleaders will, again, they will get the amount under section 194E. But otherwise, suppose who came recently? Katy Perry came to India to perform. So the income which he will be receiving from the Indian event company would deduct TDS under section 194E. Sport association, many sports association have some agreements regarding organization of a game or so and so on, and whatever payment you make to them would deduct, you will deduct the TDS under section 194E. Any doubts? But please be clear to add surcharge and cess. No threshold limit in this. Am I sharing it? Yeah. Calculate the amount of tax to be deducted on payment made to Ricky Ponting, an Australian cricketer non-resident in India, by a newspaper for contribution of articles of for rupees 25,000. So 25,000, there is no limit. Ricky Ponting is non-resident. TDS would be deducted under section 194E, including cess. 25,000 paid 20.8, which would be 5,200. See, sportsmen, when I talk about sportsmen, I strictly talk about the person playing the sports. Umpires are not covered here. They are professional. You can say notified if they are resident, then 194J. If they are non-resident, then 195. So, in a person receiving a car in the man of tournament, so generally students, these car would go in your 194B because he's getting that because he won that particular match by participating in a game, that would go in 194B. Because car is not that contract which he is playing for, right? That is the winning amount. Great. Clear? Sure. So next we go to our next section, which is a small section, which I'll just take it from here only. 194EE, payment in respect of deposit under national savings schemes. Now, national savings scheme are the schemes which are run by government. So any amount which you receive from such schemes for amount of more 2,500 or more, the TDS would be deducted at the rate of 10%. Now here, this is the exception of 19. I was saying for 197B, all the sections which cover resident. Here, this section covers all person deductee. Then also a relief of COVID is given because it's a national savings scheme, a national income scheme. So that's why. So 10% ki jagah, they will deduct the TDS at 7.5%. From again, this section, not very important, but you should have a knowledge of it. (194F) also again not important because those mutual funds were issued many years back. So now we come to 194G. So we did 194D. Let's repeat again. Insurance commission. 194DA, sum of life insurance policy. And only life insurance policy. Please do not take your medical reimbursements or medical policy reimbursements in that. Then we did 194E, TDS on payments to non-resident sportsmen, entertainers, sports association. Then 194EE, payments on deposits, payment amount received from deposits of national savings schemes. Now we start with 194G. This is again a commission related section. 194G talks about TDS on commission on sale of lottery tickets. Again, this section covers, just one second, lots of mess on my table. This section covers any person who is paying commission on sale of lottery tickets to any person, who is obviously a person who is arranging the lottery, and then there's a person who is distributing. So here, suppose this is a company who is arranging the lottery. They do not go and sell the tickets. They assign agents. And then these agents sell the tickets to persons, right? So these agents get commission on the basis of number of tickets sold. So the payment which I'm talking about is this payment which the lottery, the company which has arranged lottery would be paying commission to the agents. They will deduct the TDS at the rate of 5%, at the rate of 5% at the time of credit or payment, whichever is earlier, only when the commission amount is more than 15K. Again, this section is also an exception. Here also they provide a relief of 3.75%. Simple, not again a very frequently used section, but commission section. One commission section is insurance commission, 194D. Another commission section on lottery tickets is 194G, and one general commission section, which is an important section, which we are going to do now, is 194H, which is a section on TDS on commission or brokerage. Now, everyone, up till now, some fast couple of sections were simple. Now, please focus here. Why do I miss words? Abhi tak anyone has doubt? Okay. So now this section talks about, 194H talks about when any person is paying any person commission or brokerage. What do you understand by commission or brokerage? Anyone who's acting on your behalf for goods, for acquiring goods, selling goods, services, or provision of services, you make them a payment which is in nature of commission or brokerage. Like you go for house hunting, you meet a property dealer, you pay him the commission, that would attract the TDS, obviously subject to certain things. Or you have some person who is exclusively procuring raw material for you, you give him the commission. That is also 194H. When I talk about commission or brokerage, I look for seeing principal and agent relationship. A principal and agent relationship. Wherever this relationship is established, the payment is in the nature of commission, and hence TDS would be attracted if and only if the person who is making the payment, who is any person other than individuals HUF, and individual and HUF only when their turnover in the preceding financial year for business is more than 1 crore, or in the case of profession, the gross receipts are more than 50 lakhs. They will be covered only then. Making a payment to a resident. Here, this section covers only resident, will deduct the TDS at the rate of 5%, 3.75% for COVID times, if and only if the commission and brokerage is more than 15,000 at the time of credit or payment, whichever is earlier. So can I say all these commission sections have one thing in common? The rate is 5% and the threshold limit is 15,000. But only your 194G covers any person who is the deductee, but 194D and 194H covers resident person strictly. Yes, can I say that? If you will be able to remember now? Yes. But commission ke case mein students, one very common case study comes. First of all, commission will not cover professional services. Secondly, BSNLs and MTNLs have various PCOs, right? So those PCOs has been clearly written in the Act, would not come under the provision of TDS under section 194H for commissions. Whenever these BSNL, MTNLs are making payment to their PCOs, that will not cover under commission. One very, very common circular which comes, and a question comes out of that. Please focus. There's a circular. Let's just understand it with an example. Mr. A needs to get an advertisement in a newspaper regarding a sale which is coming at his store. Okay, so he will go to an advertising company, and that advertising company then suppose contact the TOI office, Times of India office, and Times of India will then publish it. So Mr. A is not having any direct contract with the Times of India. Now we understand in the previous class that section 194C is attracted on the payments for advertising. Correct? So now you can see here, this particular arrangement has two types of payments. One is the payment which you have made to advertising agency. Another would be the payment which the advertising agency would make to the media house or the publishing house, right? So this would clearly attract 194C. Payment for advertisement would attract 194C. Now a question comes, this would attract 194C or not? So there was a clear clarification for like 20 years back that this will not attract 194C. Okay, but then after certain years, a question arose. Suppose I make a payment of rupees 1 lakh rupees to advertising company. Advertising company further made a payment of 85,000 to TOI. Obviously, advertisement would retain some money, and then obviously they're also working, they're into business, they will retain it. Yes, so they made a payment of 85,000 to TOI. Now, a question was raised couple of years back that what about this 15K? This 15K, which is the income of this advertising company, whether it is in the nature of commission which he has received or retained from TOI. How? See, yahan tak to it is clear. Till here it is clear that it is 194C. And here a clarification came that it is not 194C. But now a person retaining the money, whether this 15K which is retained by advertising company can be said as a commission paid by TOI to advertising company for getting the advertisement. So the clarification, the circular of 2016 clearly said that this would not be a commission. This would not be a commission, and hence no TDS would be attracted here, whether 194C or 194H. Why this is not a commission? Because I told you, number one thing, for establishing commission and for triggering the TDS under section 194H, you have to see that there is a principal agent relationship. And what is a principal agent relationship? When the agent acts on behalf of the principal. Now, advertising company is not acting on behalf of TOI. It is working for, it has its own business. A person came, TOI ke paas he wanted to, TOI ke paas he wanted an advertisement. He just acted as a middleman. Okay, but there is a case law of Parasar Bharti, where Parasar Bharti itself, it's a media company, self-appointed agents so that they can bring some advertisement to the channel. In that case, whatever Parasar Bharti will pay to such advertising house or advertising company or advertising agents would cover as commission under section 194H. You know why? Because here these agents are working exclusively for Parasar Bharti, acting on behalf of them, getting the advertisement exclusively for them. Clear? So these are the circulars which are there in your book also, in your module also. Kindly please read whatever we do it in the class. Okay? Parasar Bharti. Okay, I'll take care of it. Any doubt? Another case law which is of Qatar Airways, and on basis of that there is a question also. So we'll do a question and then we'll understand the case law of Qatar Airways. So this would cover our 194H. All these circulars which we are discussing are there in your module. I would request you to read through. Now it would be easy to understand. Okay? So now this question is based on a case law of Qatar Airways. First, let's read the question. B Airways Limited sold tickets to the travel agents in India at a minimum fixed commercial price. The agents were permitted to sell the tickets at a higher price, but not exceeding the maximum published price. Commission at the rate of 9% of minimum fixed commercial price was deducted under section 194H by the company. Now, what is this? So I'm an airline. Okay, now there are agents. Now, what has been decided? Now, there is always a range which is decided between the agents and the airline. The airline says you cannot sell below the minimum amount, and also you cannot sell it more than the maximum amount. So suppose the minimum amount of a ticket is 10,000 and the maximum amount is 50,000. Okay. Now what has happened is the commission has been decided upon 9% of 10,000 rupees. So 900 per ticket you will get as commission. Clear? Now this is what has been decided between the airways and its agents. And then on that 900, obviously taking the whole year amount, they are deducting the TDS. Now, obviously the agents are selling at a higher price than the minimum amount, but obviously between that bracket of 10 to 50,000. Now the assessing officer comes and he contends that the liability for tax deduction at source is attracted on the difference between the minimum fixed commercial price and the maximum published price by treating it as additional special commission in the hands of agent. Now, is the contention of the assessing officer tenable in the law? So let's again 10K to 50K. Now 10K they have fixed as a base to determine commission, which is 9%. And on whatever the commission amount comes, they deduct the TDS at 5%. Clear? Now here the assessing officer says whatever the difference is coming, this is an additional special commission. On this, the commission should be determined and then TDS should be determined. Now, is this tenable? So this is actually the facts of your Qatar Airways case. So Qatar Airways, it was decided by the Bombay High Court, where they said that it is impossible for the airways to take the data account of each ticket sold and then calculate the commission and then on that commission give the deduct the TDS. It has already decided an amount on which commission is sold. It is totally on the agent where they are selling it at the minimum price or selling it at just a notch of higher of it or selling it at total higher price. That is on the agent. But for the airways, they have decided a base, and also it is impractical for them to determine from its thousands of agents out of hundreds and thousands of tickets sold that at what price the ticket is sold and then calculating the commission and so on. So they have fixed a base price. So there is nothing wrong in it. There is nothing wrong in it. And this is absolutely correct. This cannot be considered for calculating the commission. Clear? It is, see, agent may sell it at whatever price, but what you have set it as base, they're selling it at that and they have fixed the commission on that base, and that is totally okay. Clear? So these are all the clarification circulars and your case laws in commission. Students, whenever any question comes, just focus on your concept, see whether it is that income, and if it is an income, it is within all those threshold limits, deduct the TDS. Now we move ahead to another very, very important section, section 194I. Any doubt up till 194H? Individual NHUF, remember, only turnover profession wale. You will see wherever these individuals in HUF who are covered, only those are in the business or profession, and only those particular incomes are covered, like contract, professional payments, your commissions, your rent, all of these are only covered. (194I) TDS on payments of rent. When we talk about rent, we talk about amount which you receive for or letting someone use a particular land, building, land apparent to that building, machinery, furniture, fittings, plant, equipments, all of these are covered. So basically usage charges or hire charges given paid by any person on letting, leasing, subleasing, tenancy, all of these terms cover under rent. So whenever a 194I question comes, what you will see that the use of land, Kili, you are getting the payment, right? For the use of land, you are getting the payment. So now this, to understand this, you got to understand the knowledge of rent, which you got. Now this section covers payment of rent by any person except individual and HUF, and individual and HF only if they have the turnover and gross receipts. Making a payment to any resident person in the nature of rent, will deduct TDS at the rate of 2% or 10%. Now 2% is for if you're paying the rent for plant, machinery or equipment, and 10% is for other rent, which may include your building, factory, anything, or even furniture and fitting also. Furniture will not go in 2%. Please be very careful. Furniture and fitting also would be covered in 10%. So 2% for plant, machinery, equipment. Plant, machinery, equipment. Other rate is 10%. So if I'm paying you rent for plant, machinery and equipment, I will deduct TDS at the rate of 2%. If I'm paying you rent for suppose a building, I'll deduct the TDS at 10%. Now here students, it's subletting would also cover. Now house property ke case mein ownership is mandatory, right? To take it in income from house property. Otherwise, the rent goes in other sources, right? So here, TDS would be deducted in 194I only, even if you are the owner or not. Second thing, suppose I'm taking both the building and the plant from you, then I have to segregate that rent and I have to deduct the TDS accordingly. When the TDS would be deducted at the time of credit or payment, whichever is earlier. Since it's a resident person wala section, so 2% ki jagah I'll deduct 75%, which is 1.5%, and 10% ki jagah 7.5% in the COVID times. The threshold limit. Now the threshold limit is when the rent amount exceeds 2,40,000. So any person, including individual HUF, having turnover of the requisite limits, paying rent to any resident person will deduct the TDS at the rate of 2% or 10% at the time of credit or payment, whichever is earlier, if the rent exceeds 2,40,000. Clear? Now here some particular situations which arise. This is a building which I take on rent, but the building is co-owned by two brothers, one Mr. A and one Mr. B. I take a office building at rent. I have the requisite turnover. Okay, one Mr. A and one Mr. B, and the rent is fixed at 40,000 per month, 20,000 each, or say 40,000 per month, or 30. Let's make it 30,000. 15,000 each. So now a question comes whether the TDS would be deducted or not. I am paying a rent of 3,60,000 for an office building, 50-50 to two brothers. So a question will come whether the TDS is required to be deducted or not. Think. Yes, no. The answer is no, because again I told you the limit is no 2,40,000 per annum. All the limits which we discussed up till now are per annum. Wherever monthly limits will come, I'll tell you. So because 2,40,000, again, these limits are per person. Per person. And I'm making only 1,80,000 under the PAN of Mr. A and 180 under PAN of Mr. B. So I'm not required to deduct the TDS. Yes, people make such exercises to avoid TDS, but what can we do? Whatever the law says, we need to abide. Next example. I took an office building on rent, which also had a plant. This looks more like a door, but anyway, this also had a plant. So the total rent was fixed at 40,000 per month, out of which 25,000 per month was for building and 15,000 per month was for plant. And this has to be paid to Mr. C. ये तो हो गया, हाँ. So to Mr. C. Now a question will come whether the TDS is required to be paid or deducted or not on the payment made. Yes, the limit is per owner buys. Correct. Very good. इसमें बताओ now. Raman, please do not deduct the TDS in this previous example. Now, isme tell me whether the TDS would be deducted, because here the TDS would be deducted at plant and machinery for 2%. Here it would be deducted at 10%, assuming the normal times. Yes, payment on building 10%, plant 2%, very good. Nitesh also, yes, payment to a person, very good, is exceeding. Very, very good. So see, the nature is rent. Whether plant and machinery, the limit is not different for plant and machinery and building. The limit is 2,40,000 for the rent amount. The TDS rates are different. So per person, the rent would be credited, would come to 4,80,000, and hence the TDS would be deducted under section 194I. Clear? Yes, so I hope you will not make such error. You do not deduct the TDS on municipal taxes if you're paying it to your landlord. You do not deduct the TDS on refundable security. So on these two, you will not deduct the TDS. Very good, Anjali, very good. In fact, everyone has given the correct answer. Very good, Ambika, good, good. Okay, so you will not deduct the TDS for municipal taxes. You will not deduct the TDS for refundable security. Advance rent pay, you will deduct the TDS. Yes, you will deduct the TDS. Why? Because credit or payment, whichever is earlier. Okay, one such, again, some circulars. One such circular says that when you are making a lump sum payment to get the leasehold rights, and then these leasehold rights are not adjustable, these are like your securities only, you can say, then on those leasehold lump sum payment rights also you will not deduct the TDS. Also, there is a specific clarification. REITs, Real Estate Investment Trust, they invest in properties and then they get direct rent from that. Assessment chapter mein you must have studied. So it has been clearly written that the person who is paying REITs the rent on the asset which are directly owned by them, they will not deduct the TDS. So REITs will get the TDS amount without the rent amount without deducting the TDS. No TDS is required to be deducted when we talk about REITs. Next, circular which came is regarding storage, cold storage. Now, cold storage, students, is a big container type of machine. It is a big machine type, a container room types you can say, where a temperature is preserved, huge electricity charges, huge built-in charges for that. So many times what happened when you go into mandis, okay, so they some big shop owners have these cold storage, and others people just put their items or put their produce for that in that cold storage and pay that person the cold storage charge. Pay that person the cold storage charge. A question was arise that whether these cold storage charges are in the nature of rent and the TDS should be deducted. So if you have a cold storage and I am preserving the materials there, and per month I am paying you 5,000 rupees or 10,000 rupees. So whether on these cold storage, whenever the person who is making the payment to such cold storage owners, whether they should deduct the TDS. So the circular said that, see, again, primary thing you have to see that there should be a use of land when you're talking about rent. But here they are just paying the amount for preserving the articles, right? For preserving the articles. So there is no such, there is more of preservance, and use of land is incidental, which you can say. There is more of preservance and use of land is incidental. And that's why there would be no 194I, but yes, there would be 194C because it's a contract. So hence 194C may get attracted, but 194I will not get attracted for sure. Clear? Another question which comes in your exam is regarding passenger service fee in terms of airlines or land and parking charges. इसमें there is a Supreme Court का judgment also, there is circulars also, which you may people refer. There was Bombay High Court का Madras High Court का ruling, there was Delhi High Court का ruling. Supreme Court went through Madras High Court ruling and Delhi High Court का ruling they overruled. So what was this? Now, whenever you are operating airlines, you pay to the airports huge charges. So suppose I run Go Airways, okay? Now Go Airways, you see that on all airports, or say suppose you come to Delhi airport, there are their planes parked there. Then there are passenger services fee which you pay to them for the services which they are providing to the airlines, like security check services, boarding pass services, luggage services, all these services they are providing. So the airline pays to the airport authority. Similarly, for land and parking charges, where they use the runway and where they park their planes, for that also they pay the airport authorities a particular amount. So question came whether these services would, whether these payment which is made by the airlines to the airport authorities would be called for 194I. Would these attract 194I? So here Supreme Court ka judgment also supported that, see, again, rent payment are attracted when there is a primarily use of land. But here again also any airport which is getting operated has to provide these certain services as per the international or airlines protocols. They cannot say that we will not provide you such facilities. They cannot say that we will not provide you service for luggages, or we cannot provide you space for parking it. These are just services, facilities which any airport operator has to provide it to a airline operator, right? So again, incidental use of land is there, but what is there? There is other provision of facilities which are being provided. So the facilities के लिए the payment are made, and the land का use is just incidental. So hence it's only an incidental use of land. Hence 194I would not be attracted for such payments. Clear? Okay, so these are the case laws which which comes in your rent related questions. Meanwhile, we can attempt one question. ABC Limited took on sublease a building from J, an individual, with effect from 1st September 2020 on rent of 25,000 per month. It also took okay. It also took on hire machinery from J with effect from 1st October 2020 on hire charges of 15,000 per month. ABC Limited entered into two separate agreements with J for sublease of building and hiring of machinery. The rent of building and hire charges of machinery for the financial year 2021 were 1,75,000 and 90,000 respectively, which were credited by ABC Limited to the books of account of J on 31st March 21. Examine the obligation of ABC Limited with regard to the reduction of TDS in respect of rent and hire charges. So this we have already discussed. Please quickly tell me the answer for it. Padmanam, yes, you can say 194C then would be attracted for PSF. Good question. Land on lease for agriculture purpose. Again, per se, see, whatever income tax provide as relaxation, only that relaxations are to be taken. Whatever they provide exclusively or inclusively, only that has to be taken. So when I see 194I, they do not give any relaxation for agricultural land or land taken for agriculture purposes. So in that case, you may deduct TDS, but farmers which you take land on agriculture purposes do not have, in most the cases, turnover of more than 1 crore. But yes, if any big company is taking land for agriculture purpose, then they will deduct the TDS. Quickly tell me the TDS amount. 2,65,000 pay. 175 pay, you will deduct 7.5%. And 90,000 pay, you will deduct 1.5%. And you will write first, how will you will write what is 194I says, what is the rate, what is the rent, when is the TDS has to be deducted and all, the limit. Then you will write about the limit is particularly for aggregate of both plant and machinery and your what you say here in the case building. So full 2,40,000, and since the amount is crossing 240, TDS would be attracted, but the TDS would be so and so. Clear? Good. Next section. So after this section, we'll take a small break so that you can also refresh and recollect yourself. This is also related to rent. Section 194 IA. TDS, we'll do IA and IV, okay? TDS on transfer of immovable property. This is not rent, IB is rent, sorry. TDS on transfer of immovable property. Please write here clearly other than rural agriculture land. So this section was one of the few sections which started applying TDS on capital gain transactions. So this section says any person would deduct TDS if the payment is made to any resident person for transfer of immovable property. So any person would be buyer. Buyer is making the payment to seller. This is the transferor and this is the transferee. Yes. So any person who is making a payment to a resident person will deduct the TDS if the consideration is equal to or more than 50 lakhs. So this section again covers 50 lakhs also. If 50 lakhs is the consideration, you will deduct the TDS. Just like we did it in 192A. 192A also included your limit. So here also 194IA includes 50 lakhs. So if the consideration is 50 lakhs or more, we'll deduct the TDS at the rate of 1%, COVID times 0.75% of such sum. So again, if the suppose if the consideration is 70 lakhs, so you will deduct the TDS at 1%, which is 70,000 while making the payment. This again, TDS has to be deducted at the time of credit or payment, whichever is earlier. First, note all these things, then I will tell you some particular parts which you need to take care of. Sumit asked, for the month of May 2020, proportionate TDS will be deducted at 10% or 7.5%? No. You see when is the credit made or when is the payment made, because time of deduction is one single date. It's not a month, right? So time of deduction, if the credit is done before 14th May, you deduct it at the normal rate. If it is done after 14th May, you deduct it as the post-COVID relief rate. When it is getting due or when it is getting paid, whichever is earlier. Okay, so everyone back to 194 IA. So 194 IA talks about TDS on transfer of immovable property other than rural agriculture land. So if an urban agriculture land is sold, 194 IA would be attracted, right? Point number one. Then any person who is a buyer or a transferee making a payment to a resident person, if the consideration is more than 50 lakhs, is 50 lakhs or more, will deduct the TDS at 1% or 0.75% as the case may be at the time of credit or payment, whichever is earlier. Now here 50 lakhs is the consideration, number one, and consideration, if you will see, may be paid at one time or may be paid in installments. Consideration is fixed. It may be paid in installments. At each installment, you will deduct the TDS, even if a single installment is less than or equal to 50 lakhs. Is less than 50 lakhs, then also you will deduct the TDS, because consideration is always decided. You go to builder flats, they are into making, and for like 5-6 years, you pay the consideration. Obviously, each installment is less, but since the consideration is 50 lakhs or more, you will deduct the TDS. Number one. Secondly, these consideration not only include the consideration for a building or for that immovable property. When you go to builder flats, they take the consideration not only for the flat which they are giving you, they take the consideration for parking lots, they take the consideration for facility of lifts, other facilities which they're providing you, electricity, water, maintenances, all ka lump sum consideration they takes. So all that would include into the consideration. All that would include it into the consideration. Okay. Next thing. Here, now suppose an agreement is made between Mr. A and Mr. B and Mrs. B. That means there are two owners again. Mr. A will pay a consideration of 70 lakhs, 35 lakhs each. Now, will he be required to deduct the TDS? The answer is yes, a capital yes. Now, you will say, ma'am, rent mein to we did not. We saw one per person limit. Here, students, the limit is not per person. Here, the limit is as per the consideration. The moment the consideration is 50 lakhs or more, whether you're paying it to one party or 10, it does not matter. You will deduct the TDS. You will deduct the TDS. So please be very sure to deduct the TDS, even if per owner the limit is getting below 50 lakhs. Okay, so the TDS in this case would be deducted. Okay, I'll come to your question, Padmanam. Just 1 minute. Next thing which you have to take care in mind is installment thing clear, 50 lakh thing clear, co-owners clear, and consideration includes water, electricity, no. Another thing which your student have to take in their mind is, remember this thing called SDV. 50 C may it gets attracted, 43 CA may it comes, then 56 210 maybe also it is called that SDV. Suppose the actual consideration is 40 lakhs and SDV is 52 lakhs. You are the buyer who is making the payment. You will make the payment of 40 lakhs, but the stamp duty value is 52 lakhs. Now, a question will come whether TDS would be attracted. You will deduct the TDS. The answer is no. For you, you have to see the actual consideration, whatever you are paying. For him, who is basically the seller, uske liye this thing is important that he has to take this for calculating capital gain. But for calculating the TDS, SDV is immaterial. Please write it bada. SDV is immaterial. Whether it is more than actual consideration, more than 110% of actual consideration, it does not matter for 194 IA. Good. Another thing and the last thing, which now this is one of the 3 sections where every person has to deduct the TDS, where every person has to deduct the TDS. Every transferee has to deduct the TDS. Now, again, students, I told you individual and HUF sale purchase transactions are very more. Now, to deduct TDS, TAN number is mandatory. To obtain TAN number is mandatory, and then monthly returns, monthly challans, quarterly returns, intimations, very processing things, right? And then downloading certificates, issuing the certificates, so many things comes as compliance. So there are 3 sections. All of these will be doing 194M, okay, where TAN is not mandatory. Where TAN is not mandatory, that means the person deducting TDS may be an individual with as low as turnover of 10 lakhs in the preceding financial year. If he's paying it for 50 lakhs and more, he will deduct the TDS. Now, the TAN is non-mandatory, then how this procedure applies? Here, students, this is a total separate procedure. Please understand it. For 194 IA, 194 IB and IM, 194 IB and M are totally same. What happens is you deduct the TDS and you deposit the TDS under your PAN. Please write it down. PAN of the buyer. So the TDS is deposited under the, as in, instead of TAN, PAN of the buyer is important. Then the same, all other TDS has to be deposited by 7th of the next month in which it is deducted. So next following month means 7th tak you have to deposit. But this TDS can be deposited by within 30 days of next month. So if it is deducted on 4th of April, so by 30th May, you can deposit this TDS. Now, when you will deposit the TDS, so here the process of depositing, return, challan, everything comes in one form. You just have to fill one form and it would be assumed that you have filled the challan, you have filed the return, and then the certificate can be downloaded after 15 days. So a form called form number 26QB is filed. It's a very elaborative but simple form where you write your PAN number, where you give the details of the seller, where you give the details of the property, where you give details of the consideration. These simple things. And the moment you will click next, at the end, it will ask you about the bank details from which the amount has to be deducted, and that's it. There is no other thing that you have to file the return for it, you have to submit a challan or anything. So here the compliance is one single thing which you make within 30 days of the next month, and it would be equivalent to filing of the return, would be equivalent to first depositing of the amount and filing of the return at the same time. So there is no compliance like other TDS provisions. For this section, there is just one form which has to be filled, and then the challan has to be deposited and the return is set to be filed. Okay, so this is happens. So here for a buyer, there is no TAN, which is mandatory. Only thing he has to have a PAN. So with this, I think Nitesh, your question also get answers. A non-resident transferee will deduct the TDS with his PAN and deposit it in the PAN of the seller. Clear? So this is the procedure which is there for other coming to sections. So I hope the procedure is clear. Any doubts? So that's all about 194 IA. If consideration, you have to see the consideration, you have to see the what consideration includes, stamp duty value totally to be ignored, one or more seller totally to be ignored, installments, each installment you have to deduct the TDS depending upon that installment amount. You will not deduct the TDS total of 50 lakh in one installment. Whatever installment you are paying on that 1% you will deduct if the consideration is more than that. Or basically whatever is due pay, you will deduct the TDS. And the TDS has to be deposited by 30th of the next month in one form, come challan, come return. Such type of students question will come and they will judge your understanding, and these questions will not just judge your understanding of TDS, will judge your understanding of 56 student, will judge your understanding of 50C, 43 CA as the case may be. So you have to not apply just one section while attempting a question. Just open your mind and just remember wherever you have read a particular section. TAN is compulsory for other sections. Other sections ka procedure I'll come later, but TAN number is a separate tax deduction account number which you obtain, just like you obtain PAN. Okay? But here for this particular section, TAN is not mandatory. Why it is not mandatory? Because you will see, first of all, this section is so much in use because sale purchase happens from us individual not earning a business income also. So for again to remove all these compliance burden, the TDS provisions are based on here particular this section on the basis of PAN of the deductor instead of TAN of the deductor. PAN of the deductee was always mandatory, right? Here, PAN of the deductor will work, no TAN of the deductor required. I'm asking, just come. Okay, so G Prasad has a question. G Prasad says, suppose, ma'am, I'm just taking an example out of this. I'll take the consideration again, 70 lakhs, which has to be deposited in 10 months, beginning from 1st April. 7 lakhs each, right? Now, 1st April ka, suppose the April month ka, suppose the due happens on 30th April, right? The due happens on 30th April and you have to deposit it by 30th April itself. So now when you're making the payment for April, 7 lakh pay, you will deduct 1%. For May, the due happens on the last day and the payment also happens on the last day, 31st May. Here, 7 lakh pay, you will deduct the TDS at 0.75% and so on for June 0.75, July 0.75 and so on. Okay, clear? Whenever the installment is getting due, others who understood PAN and TAN, okay, so this question on the screen, please try attempt it. Yeah, Mr. X sold his house property in Bangalore as well as has his rural agriculture land for a consideration of 60 and 15 lakhs respectively to Mr. Y on 1st August 2020. He has purchased the house property and land in the year 2019 for 40 lakhs and 10 lakhs respectively. The stamp duty value on the date of transfer, that is August 2020, is 85 and 20 lakhs for the house property and rural agriculture land. Determine the tax implications in the hands of Mr. X and Mr. Y and the TDS implications, if any, in the hands of Mr. Y, assuming both Mr. X and Mr. Y are resident Indians. First of all, let's discuss about the capital gain in the hands of Mr. X. Now, Mr. X ke liye there would be no capital gain on rural agriculture land because it's not a capital asset. But yes, it would be capital gain in the hands of X for house property. The capital gain full value of consideration would be 85 lakhs and cost of acquisition would be 40 lakhs. He in less than 1 year he has sold it, or basically less than 24 months. So 45 lakhs would be the capital gain short term. Clear? Okay. Then coming to Y. Now Y के hand में what would be the tax implications first? Tax implications is that he has paid an inadequate consideration. Inadequate consideration how? For a property of 85 lakhs, he has only paid 60 lakhs. So 25 lakhs would be his income under the head other sources, which is a gift. Because it is more than 50,000, it is more than 10% of the consideration. So this would be a gift of 25 lakhs. And other on the rural agriculture land of 20 lakhs for which he paid 15 lakhs, that's not a capital asset to be considered for gift. So that's not a property to be considered for gift. So no tax implications on that again. Now the TDS implications. TDS implications would arise, yes, because the sale consideration, the actual consideration is more than 50 lakhs. It is 60 lakhs and the consideration happens on 1st August. So 60 lakhs pay 0.75%, which would be 45,000. The TDS would be deducted. And 194 IA on rural agriculture land does not apply. So this is how you will do this particular question. Okay, with this, I'll give you good 10-15 minutes break, refresh yourself. Others interesting sections are coming. 194 IB, 194J, 194K, M, N, O. So all of these will be done in today's class. And we'll see if we can do 195 also. Non-resident related sections I'll do ekdam later. Okay, so see you after break. Thank you. Welcome back after the break, everyone. So now we were discussing our TDS sections and we did till 194 IA. Just a quick revision of what we did. 194D, TDS on insurance commission. 194DA, TDS on lump sum payment of life insurance policy or payment from life insurance policy. 194E, TDS on your payment to not citizen of India's and non-resident athletes, sportsmen, entertainers, sports association, which are covered under 115 BBA. Then your 194G, TDS on lottery commission. 194H, TDS on normal commission. 194I, TDS on rent, which has plant, machinery and equipment separate, and your building and others separate. 194 IA, TDS on transfer of immovable property other than rural agricultural land. So now we begin with your 194 IB. I hope all your questions are answered and you people are getting interest today because so many sections and so many new relatable things, right? I hope so. So now we begin with 194I. I'll share the screen one second. Okay, so 194 IB. Rent on immovable property. Now you will say, ma'am, just few time back we did rent. Why are we doing it again? Who was not covered on rent of immovable property? Who was not the deductor? Individual on HUF, right? Obviously, individual and HUF having individual and HUF having the requisite turnovers, which is your 1 crore in the preceding financial year for business and 50 lakhs for gross receipts in the preceding financial year, pay rent will deduct TDS under section 194I. But suppose there are person who are having less turnover or there are person who are having no turnover, they are salaried person, are paying rent and they are paying rent of a huge amount. So this was going as a loss of revenue to the government. Why? Because huge amount of rent is being paid, but at the same time, since the deductor did not have any business income or has a less business income, that was getting escaped. So 194 IB came for individual and HUF other than the one who are covered in 194I, that they will deduct the TDS on rent. But obviously that rent is not an amount of 5,000 or 10,000. The TDS threshold, you can say, would be 50. Here the threshold is per month, would be 50,000 per month. So if the rent exceeds 50,000 per month or part of the month, then TDS would be deducted. And this rent, yes, obviously paid to any resident person. The TDS would be deducted here is at 5%, not 1, 2 or 10, at 5% if per month rent is 50,000 or more. Now we come to time of deduction. Now here and this section has a very particular time of deduction. This section says, now see, again, I'm a salaried person and I'm living in a good penthouse and I'm paying a rent of 60,000 per month. Every month if I have to deduct TDS, again compliances and all those things. So they said that TDS would be deducted only one time. That would be last month when you're making the payment of the last month of the year. That is your March rent. When the last month rent of the year gets due or paid, whichever is earlier. So whenever March month rent gets due or paid, then the TDS has to be deducted. Now you will say, what if the person does not live the whole year, he vacate the house in the middle of the year? Then obviously you will know when the house is getting vacated. So then the TDS would be deducted in last month of vacancy. Matlab last month when the house is being vacant. So last month of the year, or if you're not living for the whole year, when you are living in the last month, you just deduct the TDS while making the payment or while making the credit. Simple. So if I take this example, on your screen, rent is being paid for each month, April to March at 58,000, 6,96,000, right? So the TDS has to be deducted at 5% of the total rent. 5% of the total rent. 34,800 TDS would be deducted, and the payment of 23,200 for the March month will go. For other months, every month you will pay 58, 58, 58, 58. For March month, you will pay 58, but out of that you will deduct 34,800 and deposit it to the government in the name of the landlord, obviously, and 23,200 to the landlord. Clear? Yes. And suppose he vacated the house in December. He vacated the house in December. Now till December, what? Suppose he had to vacate the house in December. So till December, whatever is the rent amount total at 5%, I will deduct the TDS and will pay it. And will pay it. So be very careful. Now you will say, ma'am, December, mein, what if he just stayed for half of the month? He just stayed for half of the month. So no problem. TDS is attracted when the rent is 50,000 or more for the month or part of the month. So total pay, you just deduct the TDS. And now you will say, ma'am, what if he's just living 2 days or 3 days? Then how will he deduct the TDS? And technically, that would not be the last month of vacancy. This would be the last month of vacancy. Accordingly, deduct the TDS in November to be on a safer side. Okay. Now, one thing clear: time of deduction would be last month of credit or payment. Now, I told you, if the person does not provide the PAN number, you have to deduct the TDS at 20%. So suppose he's not provided you with the PAN number, you will deduct the TDS at 20%. 58,000 ka payment you have to make, but you have to deduct 1,39,200. How will you deduct this? How will you deduct this? You cannot deduct this. So in that scenarios, whenever a PAN is not provided and 20% is crossing the last month rent, then the maximum TDS that will be deducted would be equal to the last month rent. That means you will not make any payment to the landlord. Full TDS you will deposit. Full TDS you will deposit. So in case a person does not provide the PAN number, then the maximum rent that would be deducted, if 20% is getting into it, fine, which will not in most scenarios. Then in that case, maximum rent, maximum TDS which would be deducted would be 20, would be your last month rent amount. Clear? Yes. Now again, since this is a very compliance procedure. Here also person may be a salaried person, and salaried person do not intend to take the TAN number. So this also, like your 194 IA, here also one time deduction is only happening during the year. No TAN is required. No TAN is required on basis of PAN. Again, within 30 days of next month, you have to deposit this TDS. So for the month of March, by 30th April, you have to deposit the whole TDS. By 30th April, you have to deposit the whole TDS, and one challan cum return form will be filed. For 194 IA, we have 26 QB. For 194 IB, we have 26 QC. That's it. So clear? Yes. And yes, since this is COVID time, so instead of 5%, the TDS would be deducted at 3.75%. And since again, the time of deduction is falling on March, so 3.75% would be applicable, even if April ka or May ka part of bill is there. See, again, students, to focus, obviously for you this year would be particular, and to see which rate is to be applicable, see the time of deduction, the particular date of that deduction. The bill may be before, but if the time of deduction is payment, take the payment date, see the payment date is before 14th May or not, and then see that rate amount. If it is credit or pay, whichever is earlier, if credit is happening before 14th May and it is paid after 14th May, then you will deduct the TDS as per the credit rate. So just be very particular about the time before you apply the rate. Clear, Ambika? The time of the deduction here is the last month. You do not have to see which period it is, okay? This deduction is to be made at the time of credit of such rent for the last month of the previous year or the last month of the tenancy if the property is vacated during the year. I was saying vacancy, tenancy, as the case may be, to the account of the payee or at the time of payment thereof in cash or by issue of check or draft or by any other mode, whichever is earlier. Nitesh, that would be again a very particular case, rent getting reduced and all these things. For whatever month the rent exceeds 50,000, deduct the TDS on that. No. Under this section, TDS has to be deducted only one time. Question, please. Mr. X, a salaried individual, pays rent of 55,000 per month to Mr. Y from June 2020. Is he required to deduct tax at source? If so, when is he required to deduct? Also compute the amount of tax to be deducted. Then would your answer change if vacated? Wala, we'll do later. First, tell me the answer for this. June to March. %3.75% for 10 months, right? 20625 is the answer. Clear? Would your answer change if Mr. X vacated the premises on 31st December 2020? Then June to December, 7 months, 55,000 into 7 into 3.75%, one, sorry, 14438. Clear? Also, what would be your answer if Mr. Y does not provide his PAN to Mr. X? Now, they have not asked it that whether we have to give it in reference to June or whether we are in reference to till March or in reference to this till December. So you will answer it for both the time periods. If it is till March, so 55,000 cut for 10 months into 20% comes to 1,10,000, which you can practically not deduct. So you will deduct 55,000. And similarly, 55,000 for 7 months at 20% comes at 77,000, which is again not practical to deduct. So you will deduct 55,000. Good. Very good, Raman. Okay. So, G Prasad, I assume that your question would apply to all the scenarios where the PAN or the deductor is not available. So, generally, students, when PAN or the deductors are not available, what happens is those who have filed the TDS return, since I am not very handy with TDS return, but I'll tell you what happens. When you are depositing the amount, you deposit the amount only in challan, only in the challan part. ठीक है, challan में you do not write, ignoring 194 IB and IA. Challan में you just deposit the amount. Corporate and non-corporate you make the difference. Then you make the return. Now, what happens is in practical life, return is quarterly, challan is monthly. Okay. In practical life, when the PAN is not provided, you made a payment to a person and you deducted 20% of the TDS, like good 20% amount. So they come running to you and then they provide you the PAN. And then while filing the return, you then match it with PAN and then you get them the credit. But just in case they did not give the PAN then there is one residuary entry which happens in your return form where you do not provide, where you just write the party name and no PAN number. So that is like a benefit to the authority of the income tax. Okay, this happens. Now 194 IB may, it would be very rare situation where they will not be providing you PAN, because a salaried individual in any way paying rent of more than 1 lakh always tend to have PAN numbers. So such scenario happens very, very rarely. If your challan, in fact, your form would always show a validation error, but just in case this happens, it will get proceeded otherwise also. You have to be very compliant yourself. Okay, so this is what practicality point of view is, but in general, it happens very rare. You're not paying someone the rent amount for a particular month. Will you think he will sit quiet and not ask about anything? Where is my rent? He will tend to give the PAN number then. If the PAN is not there, which okay, sorry. Okay, interesting. If there are two owners or if there are two owners, then also you have to deduct the rent, because here also they do not write per person, they write just like in 194 IA, they put the consideration as the trigger for 50 lakhs or more. Here it is also rent is crossing 50,000, then you have to deduct the TDS. See, Padmanam, again, I'll to answer this. For the first month of April 2020, for TDS purposes, Section 197 will be applicable. Again, I'll say, see the time of deduction. The time of deduction as per Section 194 IB is coming to March, right? So March का time of deduction है, and 197B clearly says that when the TDS deduction rate falls between so and so time period, then this rate would be applied. So you will apply the lower rate. It's just like your contractual wala case, which we discussed in the previous class. When here the first payment suppose was of April, sorry, here first payment suppose bill was of April, but the TDS liability was already triggering at the fourth payment. So you asked that, ma'am, whether lower rate would be applicable. So I asked yes, on this full pay you will apply 0.75%. Not on seeking that this is of April bill. The time of deduction here is crossing when the aggregate crosses 1 lakh rupees, right? So this applied in all the sections like that only. When the time is falling, see the rate, that's it. So be very, very focused on time of deductions. I understand people are getting the problem here, but again, the only solution is see as per the provision when is the time of deduction, whether it's credit or payment, whichever is earlier, whether it is payment or whether in such typical scenario is last month of vacancy or last month of tenancy or the last month of the year. So I apply the rate accordingly. If suppose April is only your first and the last month of the year of tenancy, then you will apply 1%. Oh, sorry, 5%. Everyone, any other doubt? Clear? Shall So next is your 194 IC. 194 IC is very, very, very simple. This talks about specified agreements. Rent in case of specified, TDS in case of specified agreements. Specified agreements, anyone remember capital gain, JDA section 45 5A? 5A, right? Yes. Section 45 5A is your joint development agreement where a builder takes the land from you, gives you in the consideration the one flat plus some money, right? So this says that the builder will deduct the TDS on the money component. On the money component at the rate of 10%. At the rate of 10%. The builder, who is any person, if making a payment to a resident under specified agreement, will deduct the TDS at the rate of 10%. Obviously, seeking COVID times at the rate of 7.5%. When it is credit or paid, whichever is earlier. Credit or paid, whichever is earlier. No threshold limit in this section. What do I write? Sometimes even I have no threshold. ठीक है, clear, simple. Specified agreement clear. Money part पे he will deduct the TDS at 10%. Money cash pay he's paying. Obviously that is a separate tangent. Any consideration other than in kind, basically. Next section. Again an important section. Section 194J. 194J. TDS on payments for fee of professional, not fee of, fee for. Fee for professional services or technical services. Very, very interesting section. First, let's see who's the deductor. Deductor, again, any person except individual and HUF, and individual and HUF only if they have turnover of 1 crore and gross receipts of 50 lakhs or gross receipts of 50 lakhs in the preceding financial year. Making a payment to any resident person will deduct TDS at 10%, COVID times 7.5%. While making credit or not debit, credit or payment, whichever is earlier. Now we come to threshold. In aggregate per bill is 30,000. But this is now thoda sa simple, crazy or not crazy, different. Now this limit is 30,000 per annum. If the bill crosses 30,000 or in aggregate crosses 30,000, you have to deduct the TDS. Now here in this section, there is not just professional or technical services. There is professional services. Or let me just, instead of writing, show you here. There is professional services in this section. There is technical services in this section. There is director's remuneration in this section, other than which is salary deductible. There is royalty and there is non-compete fees referred to in section 28(5)(a). Non-compete fee, remember, not to do competition, you pay him. That is his PGBP income. That I am running Momo's ka point, I don't want some other to run, I pay him a non-compete fee that do not run in my area. That is non-compete fee. Okay. Now TDS rate I told you is 10%, 7.5%, but there is a slight change from this year itself. I'll come back to that. But the 30,000 ka limit which I was saying is for each type of service separately. That means 30,000 for professional services is the limit, 30,000 for technical services is the limit, 30,000 for royalty, 30,000 for non-compete, but no limit for remuneration to directors. That means even if 1 rupee is paid, TDS would be deducted. Clear? TDS would be deducted. Now back. So if I'm making a payment to Mr. K for total 70,000, in which 10,000 was for professional services, 30,000 was for technical services, and remaining how much? 30,000 was for royalty. I will not deduct the TDS because each service ka there is a limit of 30,000 for each person. But if I make him a payment of even 10 rupees of director's remuneration, I will deduct the TDS. Now back to the TDS rates. Padmanam, I'll definitely come for 20688. Don't worry. Both the questions I'll answer. Don't worry. Okay? Abhi on this section. Now the TDS rate has been changed for technical services, and for royalty on copyrights of cinematography films. Two rates have changed. The rate in general is 10%, but from your Finance Act 2020, which is applicable to you, the TDS rate has changed. For technical services now, the TDS rate is 2%. For royalty, which you pay for the sale of or distribution of or exhibition of your cinematograph films, copyrights of the films, is 2%. For other than that, it is 10%. And obviously, 2 and 10% would be reduced to 20 by 25% for the COVID times. For the COVID times. Clear? The rate is clear? So if I say what is the rate now? %, in general, but 2% for technical services and strictly royalty for cinematographic films. And this would, yes, be your 1.5%. Okay, time of deduction, credit or payment is clear. Now for individuals and HUF, few things. And one more thing in rate, I'll come again. Individual and HUF. Individual and HUF will not deduct the TDS if their turnover is less than 1 crore or 50 lakhs gross receipts in the preceding financial year. Number one. Number two, they will also not deduct the TDS, just like in 194C, for any services which is for personal purpose. For example, if I get an interior decorator service for my office, I have a turnover of 1 crore and 50 lakhs, so on. I will deduct the TDS provided the bill is of 30,000 or more. But if I get that interior decorator services for my home, I will not deduct the TDS irrespective of my turnover limits. Clear? Also, individuals and HUF do not deduct TDS on royalty and non-compete fees. They do not deduct the TDS irrespective of the amount, irrespective of the turnover on royalty and non-compete fees. Another thing about the pay and the rates which you have to remember is that any payment which is made to a call center, when call center is your payee, BPO, then the TDS rate is 2% and obviously 1.5% seeking the COVID times. BPO also comes and providing professional services. So that is 2% flat rate. Irrespective the BPO is individual HUF, that does not matter. If irrespective the payment is of professional nature or technical nature, does not matter. It is 2%. So for the one more time, when you talk about deductor, any person except individual HUF, but individual HUF only when their turnover is so and so in the preceding financial year. They will not deduct TDS on non-compete and royalty fees, and they will not deduct TDS on personal purpose things. Clear? Now, on the rates, rates are 10% in general, 2% if we are talking about technical services, and 2% if we talk about royalty payments in respect of films. But also 2% when the payee, which is your resident person, which I talk about here, when the payee is a call center, then the rate is 2%. Clear? These are the rates which are quite so many crazy rates in professional services. Now, some few things. What is a professional service? What is a technical service? Because again, just like when we talk about rent, we see use of land. When we talk about commission, we talk about there should be a relationship of principal and agent. But what is professional service? What is technical service? This should be pretty much clear, correct? So when I talk about professional services, students, professional services go back to your 44AA, where we talk about some restricted services which are mentioned in 44A, which we begin from legal, medical, engineering, architectural services, profession of accountancy, technical consultancy, interior decoration, advertising, and other profession, right? Other profession which is notified are 4 authorized representatives, information technology, film artist, and your company secretary. Okay? These are the profession. So if these are the services, then only professional services ka TDS would be deducted. Apart from that, 194J has notified some profession for professional services, TDS, which are in the nature of sports person, umpires, referee, coaches, trainer, team physicians, everyone in relation to sports, whosoever you think so. Event managers, commentators, anchors, sport columnists, everyone. So everyone who is connected with sports is a professional and the TDS would be deducted here. Clear? So apart from this, any other profession like your cooking would or your chef would not be a professional service for 194J. For 194J. For that, you may go to 194. See, the one which I mentioned here are only my 194J services. Now, for the technical services, what is fee for technical services? Now, technical services is the one which is defined in my section 9, subsection 1, clause 7, where we talk about fee for technical services paid by government, paid by resident, and paid by non-resident. Section 9, deemed accrual. So, my technical services definition is very, it means any consideration for activity which includes managerial services, technical services, consultancy services, and provision of services for technical or other personnel. So students, again, technical services definition includes technical services. But what is this? We should analyze it for a minute. That whenever I talk about technical services, I understand as a whole fee for technical services. I understand that there is some services which is being provided to cater or to meet some specific need of a consumer, a specific user, not in general, but a consumer related special needs are being provided through services, that is technical services. Like your if something is available for public in general, should not qualify as fee for technical services. Like there's a case law also of Kotak Securities where the transaction charges which are being taken from the members of the stock exchange is not qualified as fee for technical services, being that it is not catering some special need. This has to be provided, right? So fee for technical services may be very careful that it should be catering someone's consumer special need. But how do you differentiate between managerial technical consultancy? From exam perspective, it is not important, but from life perspective, you should know. When I talk about managerial services, I'm talking about something which again has some human touch to it, The operations are related to human. When I talk about technical services, I again see that there is some specific application of knowledge, skills, or any talent, right? To address some, or there is some technical knowledge required to provide that service. Then when I talk about consultancy services, these are more in the relation of advisories, consultancy, right? Where a deliberation can be made upon. So managerial, if I give an example, these could be supervision services, these could be services relating to feedback on the basis of customers, services in relation to supply management, material management, all of these are managerial services. When I talk about technical services, I talk about where software modification, your architectural services, your surveys, geological service, all those feasibility report service where they actually have to apply all the technical data. When I talk about consultancy services, consultancy like your advisories, your legal advisory, your technical advisory, your advisory on production problems, all of these are my technical services. Clear? So to understand or to crack any case laws, what if you understand what the income is about, you will definitely be able to crack it. Now here there are again two circulars which are important. One is in relation to TPA. Nitesh, I choose not to answer the question. One circular or one specific circular comes for TPA. Where is this? No. How many of you understand TPAs? Let me tell you. There is hospital. Hospital may any person who has an insurance goes to hospital, give his insurance, mediclaim I'm talking about, health insurance, give that copy, get the approval from the insurance company, but insurance companies have a third party administrator who is called a TPA, because insurance company has their own business, right? Has a huge business, making policies, getting all that done. So third party administrator is like a third party which works on behalf of the insurance company, which look into all the claims, verify the claims, whether they are genuine or not, whether they are into the policy coverage or not, and then process the amount. So they are working totally on behalf of the insurance company. Okay, so you go to the hospital, you get a treatment of 4 lakhs rupees. They will send the approval not to the insurance company. Now this is the administrator who is working. So hospital will send the approval with all the documents, all the bills, all your reports to this TPA. Now question comes, whether TPA is liable to deduct tax under section 194J on payment made to hospital on behalf of insurance company. So they will give them the reports and they will then make them the payment. These are called cashless reimbursements. So question comes whether 194J would be attracted there or not. So the answer is yes. 194J would be attracted on the payments made by TPAs to the hospitals, because these are in the payments of medical nature and hence are professional services, and hence it would be attracted. Clear? Okay, teaching services does not in general include 194J because they are not in the professional list. Next is your computer software comes in royalty, which you have understood in royalty provisions also in section 9 also. Computer software are consideration for usage of computer software is royalty, and hence TDS is deductible. Clear? All things related to 194J clear. What is professional services clear? What is technical services clear? Rates are clear. Pay is clear. Payer is clear. Individuals and professional, individuals and HUF exceptions are clear. Limit, threshold limit is clear. I hope these are all what is related to 194J. And if there is any doubt, please ask. So 194J में professions all which are 44A में plus 44AA plus notified one plus the notified one of 194J. So total is that pool. Apart from that pool, 194J would not be there. Padmanam, I make sure I'll answer 20688 before all these sections, after once all these sections are covered. Okay? Then And 206AA is applicable to all the sections. I spoke about it at the beginning of the class. But yes, few sections have certain exceptions, like 192 MA, MMR is applied instead of 20%. Others may you apply 20%, but higher TDS rates may apply higher TDS rates. We did it in the beginning of the class also. And you will come to see in 194 IB, we already did maximum rent would be applied, and 194 OME you will see one certain exception. Rest 20% or higher TDS rate, whichever is applicable. Ambika says, ma'am, in case of 194 IA, okay, Saurabh says, ma'am, in case of is 25% concession not applicable for penal rate? This is really funny. You want the relief in penalty, that is not possible. Okay, so once you're not providing the PAN and then you want 20% relief, no. In case of 194 IA, we are making the payments installments and we are deducting the TDS on installments. Then why not in 194 IB, right? But 194 IB clearly states that there is only one time of deduction, which is credit of payment, whichever is earlier, credit of last month of rent. Credit or payment of the last month of the rent. It just says that is the time of deduction. But when you see 194 IA, 194 IA says the time of deduction is credit or payment whenever is made for that consideration. Okay, any doubts? Sure, great. So now we move ahead to your another section, which is section 194K, a new section. Why? Because now dividends are taxable. Dividends from domestic companies are taxable and the TDS is deductible under section 194. Dividends from mutual fund or instead of dividend, you should write any income from mutual fund but not capital gain. So this will not be attracted on capital gain when you're selling the mutual fund and you're getting some getting the consideration. This is on any income which is happening from the mutual fund, units of the mutual fund or unit from a specified company. Then the TDS would be deducted by such company on the payment to a resident person at the rate of exact same rate like 194, 10%, and COVID time scale is 7.5% at the time of credit or payment, whichever is earlier, and only when the income for that particular financial year is 5,000, is more than 5,000. Clear? So this is your 194K. Ma'am, in case of a person made a contract with a firm to provide consultancy services, then whether 194J would attract or 194C. See, just because there is a contract, which would be in any situation with any person, there are always engagement letters, there are always agreements. It does not mean it is 194C. Okay, 194C may you see work contracts, which we defined as advertising, catering, carriage of goods, your broadcasting, telecasting, and job works, right? Or supply of labor. Here you see professional or technical services, and technical may, if it is consultancy, then 194J is applicable. Clear? 194 clear? 194K clear? Next is again 194LA, which is a simple section. Compulsory acquisition में whatever the payment is made, whether compensation or enhanced compensation, the TDS would be deducted under section 194LA. So if 194LA is there, then 194IA would not be applicable for that particular transaction. So payment on compulsory acquisition of certain immovable properties, and immovable property other than agricultural land. Now here, immovable property other than agricultural land, 194 IA covered my urban agricultural land but did not cover my rural agricultural land. 194 LA excludes both urban and rural agricultural land, excludes both urban and rural agricultural land. Clear? So the TDS is at the rate of 10%. Again, compulsory acquisition is generally done by the government. Payment to any resident person, COVID times, it will go to 7.5%. Time is here at the time of payment, not credit at the time of payment, because compensation के cases में students it take years to come. So at the time of payment, you will deduct the TDS, and the limit is only when the compensation paid during that financial year exceeds 2,50,000. Okay. 194 LA also, I hope is clear. 194 LB and LC and your LD are related to your 115A and 115AD, which are done there, but I will obviously take it once, but after all other sections. Now, three very important sections are left: 194M, 194N, 194O. 194O is a new section. 194N has amendment. 194M was introduced last year. So really important sections. So before those sections, anyone has any doubt, please feel free to ask. Okay, so let's begin with 194M. Section 194M talks about three types of service payments. Payments for contract services covered under section 194C. I'm coming. Payment for commission brokerage. (194H). Payment for only and only professional services, not technical, only professional services covered under 194J. What is this again, ma'am? Again, first separate you teach, then you take it in one. Okay, so now this section is strictly for deductor who is individual and HUF. Now think for a second. individual and HUF were deducted there in 194C, 194H and 194J also, but not all individuals in HUF. Who were not the deductor? If I talk about 194C, any individual in HUF having a turnover less than 1 crore or 50 lakhs gross receipts in the financial year, preceding financial year, were not the deductor, right? Or any person having the turnover exceeding the limits which are defined but was paying for personal purposes, correct? But was paying for personal purposes also did not have to deduct the TDS under 194C. Yes, yes. When I talk about 194H, who were the individuals who were covered, or HUF who were covered, were the one only who had the turnover or your professional receipt more than the restricted limits. So the one who did not have, the ones who were not covered under 194H were the individual in HUF who did not have that requisite turnovers or were salaried individuals, correct? Yes. Now in 194J, who were the individuals in HUF who were not covered? Who did not have the turnover or who had the turnover less than 50 lakhs in 1 crore, and the one who were even having after the turnover or the gross receipts were paying it for the services for personal purposes. Royalty non-compete not covered here because these are strictly talked about professional services, not technical services. So all those individuals in HUF who were not liable to deduct TDS under section 194C, 194H and 194J, whether because of not having turnover or whether because of being it personal purpose, for 194C and 194J, will now deduct TDS under section 194M. So those individuals in HUF, again, who were not liable here in these respective sections will be liable to deduct TDS under 194M. So one way you were saved because of having salary or having it for personal purpose. Now the government is saying we are losing the revenue, so we cannot take a risk out of it. Clear? Now deductor is clear? Yes. Who is the pay resident person, or the deductee is the resident person? TDS rate is 5%, but only and only when the payment to any particular resident person for all the services or for either of the services in aggregate or single, as in total, exceeds 50 lakh rupees. Exceeds 50 lakhs rupees. In single or in aggregate exceeds 50 lakhs rupees. So if I'm making a payment to Mr. M, 10 lakh for contract services, I'm a salaried individual. 20 lakhs for professional services and 30 lakhs for commission and brokerage to Mr. M. I have crossed to Mr. M a person 50 lakhs rupees in a year for all these services in aggregate. I will deduct the TDS at the rate of 5%. I will deduct the TDS at the rate of 5%, and since again it is COVID times, 3.75%. When the TDS would be deducted? At the time of credit or payment, whichever is earlier. So full 50 lakhs ke upar, whatever the amount is going, total pay, you will deduct the TDS. Clear? Yes. Now, since again this is a TDS compliance which is coming on an individual who may be a salaried person or who may not have a business turnover or have a lower turnover, then again this is also a no TAN requirement section. That means no TAN is required for the deductor to deduct the TDS. He can deduct the TDS base with his PAN, and again the TDS would be deposited by 30th of the next month in one form, which is my challan cum return, which is form 26QD. Form 26QD will have simple PAN of yours, PAN of the person to whom you're making the payment, type of payment, And the 50 lakhs is a huge amount, students. So this is only for those rich persons who are making a huge amount of or taking huge amount of personal services, you can say, and still escaping the deduction of TDS. Okay, so on this basis, let's do a question. Students, kahin pe bhi, if you think that it is getting really too much for the day, or if you think that this part is not clear, this should be done again, please, or some example is required, please do not hesitate. Again and again I'm saying, because these are really, really important sections. The moment there is any query, the things will not go right. Okay, and apart from this, one thing is your homework today. We have a class tomorrow. There is no break today. We have a class tomorrow also. So you will write down each section which only covers type of payment, which covers deduction at the time of payment. Okay, separately I want it written, and I will ask it at the beginning of the class. Okay, so now, yes, Nitesh, you will have to deduct TDS. And see, you are getting safeguard from 194C because it was personal purpose. You are getting safeguard from 194J because it is personal purpose. So income tax says, okay, it is personal purpose, I will not take the TDS. But when you're making payments as huge as 50 lakhs rupees, I want the TDS, I want the information to be come into my knowledge, and that can come only through TDS route. So they will ask you to deduct TDS. This 194M will only be attracted when you are not attracted under 194C, 194H and 194J. Remember, 194H covers personal payment. Only C and J does not cover personal payment. Okay? Clear? Kahin pe bhi single confusion, please ask. Let's see the questions. Examine whether TDS would be attracted in the following cases. If so, under which section? Also specify the rate of TDS applicable. In each case, assume all payments are made to resident. First case for Mr. Ganesh. Mr. Ganesh, an individual carrying on retail business with turnover of 2.5 crores in the previous year 1920, which is the preceding years. But since the preceding years he's having the requisite turnover, C, H and J may be applicable provided it is not for personal purpose for C and J. Okay. Contract payment for repair of a residential house, 5 lakhs rupees, and payment of separate persons. Yeah. Contract payment for residential house, 5 lakh rupees. TDS would be attracted? No. No TDS would be attracted under section 194C. Why? Because it is for personal payment, number one. No TDS would be attracted under section 194M because it is not crossing 50 lakhs for previous year 2021 to a particular person. Clear? Yes. Payment of commission to Mr. Walish for business purposes. Commission hai, right? He has a turnover exceeding 1 crore in the preceding financial year. So 194H would be applicable. So 80,000 pay, and obviously it is more than 15K. 194H mein you will deduct the TDS. Clear? Now this is actually a question which will check all your understanding of all the sections. Next part. Mr. Rajesh, a wholesale trader whose turnover was less than 1 crore in previous year 1920. So C and J will never be attracted. Now let's see. Contract payment for reconstruction of residential house made during the period January to March 21. Total 20 lakhs in January, 50 lakhs in February, 20 lakhs in March. Total comes to 20, 15, 55 lakhs. So 55 lakhs payment has been done for construction of residential house. Nitesh, totally your example, right? So now 194M would be attracted. C would not be attracted because no turnover. J again not attracted here. H is also not the question. So C will not be attracted and M would be attracted because the payment is more than 50 lakhs in a financial year. So 55 lakhs pay, you will deduct the TDS at 3.75%. Next, Mr. Rajesh done, Mr. Satish, a salaried individual, payment of brokerage for buying a residential house in March 2021. 194H not applicable. Why? Because turnover ही नहीं है, so requisite तो there is no point. There is no turnover. 51 lakhs, yes. 194M would be applied because more than 50 lakhs ka payment for commission. Next, Mr. Dheeraj, a pensioner. Contract payment made during October to November for reconstruction of residential house. 194C not applicable because Mr. Dheeraj is a pensioner. But 194M would also not be applicable because the payments are not more than 50 lakhs. Now, I hope this question will answer all your doubts in relation to C, J, H, and M. 194 C, J, H, and M. Okay, Sumit says, in case 2, whether the TDS will be deducted from the last payment in March 21. See, when is 50 lakhs getting crossed? In March. So you will deduct in March. Had each payment would be more than 50 lakhs, then you would have deducted the TDS in each payment. The moment it get more than 50 lakhs, then you deduct the TDS, right? Just like for contract, or just like for any, in fact, any nature which we are talking about, the moment per financial year that limit crosses, then it is triggered. Good question. Chalo. So this is clear. Now, will you want or will you people prefer to have 2 more sections which are really important to do it now, or should we defer it to next class and I should teach 194 LB, LC, and LD? Totally your people call, because again, by the end of the next class, which is tomorrow, your TDS, TCS, return provisions, other provisions, everything would be completed for sure. And maybe we, depending upon the time, we may, because advanced tax touching is just 15-20 minutes topic. If we have time, we can do that. So please tell what would be your call. Okay, some questions. Okay, Shalik, I think so Shalik has some question related to PGBP, no worries. So Shalik says, ma'am, expenditure on scientific research will be allowed 100%, except for land and building for the companies engaged in the business of biotechnology. But in illustration 12, the value of land is disallowed. Why? So Shalik, under section 35 2AB, which is your biotechnology section, both your land and building, both are not allowed, correct? But under section 35 subsection 1 clause 4, which is for capital expenditure in general for any in-house research, building is allowed. Capital expenditure of building is allowed. So what has happened is he has taken a deduction of capital expenditure of building under section 35(1)(4). That's why only land is disallowed. So this was of an importance when there was different weighted deduction for biotechnology and in-house research businesses. But now since there is 100% only, so it's like immaterial, only land will be disallowed. Building you will get 100%. Clear? Okay, so on the house, I'll just quickly tell you about 194 LB, LC, and LD. After that, I'll tell about one popular question of 206 AA, and then we'll take a break. And tomorrow we'll start with 194N. But before that, I request you all to please come up with two questions. One, you have to read everything simple, do all the questions simple. Third, please separately write the section on which only TDS would be deducted at the time of payment, number one. Then separately write section in which the limit is also included, which means not when I say the TDS is deducted when it crosses 50,000, but there are few sections where that 50,000 or 50 lakh is also included. Write those also. Okay, this is your homework. 194 LB, I'll simply tell 115A में infrastructure debt fund pay, there is a special rate of 5%. So TDS is also of 5%. So, but since this is for non-resident, so TDS would be included of such charge and cess of 4%. So any interest payment made to non-corporate, non-resident from infrastructure debt fund will attract the TDS of 5%. This is totally what is there in 115A. 194 LC talks about interest paid by Indian company or business trust to foreign company or non-corporate on loans taken. And there is or money borrowed, and there is this particular time period. So on this interest, the companies or the business trust will deduct the TDS at 5% because the same is taxable under 115A at 5%. Whatever is the tax rate is the TDS rate. But from this year, you have a concessional rate. When the income is of the nature, please listen carefully. When income is of the nature of interest on long-term bonds or rupee-denominated bonds, which are listed on recognized stock exchange on IFSC, which is your International Financial Service Center. So if those bonds are listed on International Financial Service Center and that bonds are yielding interest, so that interest pay TDS would be deductible instead of 5, the TDS would be deductible at 4%. And 194 LD, my students, this is for qualified foreign investors or FIIs whose incomes are taxable under section 105 AD. So for them, the TDS, the interest rate is 5% on whatever they receive from your government securities or on rupee dominated bonds. So for that, the TDS rate is 5% and even the taxable rate is also 5%. But all these sections will add surcharge and cess into it. But in this year, in fact, interest received on municipal debt securities are also covered. This is it. Okay? Clear? And now quickly to everyone's favorite question. Denominated bonds, students, denominated. Higher rate of TDS when no panel is furnished by the deductee. Higher rate would be 20% or the TDS rate, whichever is higher. This is applicable for all sections, irrespective of whatever section we're talking about. But when we talk about non-resident, mostly you talk about IPL and think CRISGIL has a PAN or not. It does not matter because 194E already has 30% rate. 192A, if no PAN, MMR. 194 4B is already 30%. So 206AA is not impacted. Then your 194M, not 194M, sorry. 194 IB, maximum last month rent, last full month or part of the month, which has 50,000 or more as a rent. And there is also 194O, which you have not done, which has maximum of 5% as the rate. So these are the exception. And in case of non-resident who do not have PAN, only these 4 types of income pay higher rate would not be applicable, being interest, FTS, royalty, and capital gain. And first of all, students, if you will see, these incomes do not attract 194J anyhow. Okay, they may be attracted in 194 LB, but LB, since they have an interest income, so higher rate would not be applicable. Okay, because 194J and all of these are only for resident. They otherwise all their income goes in 195, which talks as per the taxable rates. Okay, clear? But at the same time, they will provide tax information, which is their PAN number of the state where they are resident, or some their permanent address, their details, their mail ID, etc. Then only no higher rate would be applicable. So Padma Bhushan, specifically for you, please tell me now any doubts. Others, if any other doubt, you can tell, and others, if no doubt, you can take a leave. See you guys tomorrow. Please do not miss tomorrow's class. Important part coming up. Please revise the class today because we literally done the maximum sections today. So that's it. Any other doubt? Any other clarification? So great. Thank you so much, guys. See you in the next class. Good night.